B2 Digital is a premier development league for mixed martial arts. Now, the company operates in two major branded segments, the B2 Fighting Series and the One More Gym official B2 Training Facilities Network. And with me is CEO Greg Bell. Greg, welcome. And give us, for those who didn't see the first interview, just give us an overview of what the company does.
Well, first of all, I just want to say thanks for having us, Jane. It's always nice to see you for our second interview. So I appreciate you taking the time to do this. So yeah, for those of you who don't know much about our company, we operate really doing three things. I'm a believer in never trying to do more than three things at once. So that's a lot. But the first thing we're doing as a company is we're building basically the minor league or the development league for the big mixed martial arts industry. Obviously, the UFC is the big major league. What we're doing is building the feeder system or the development league, much like the NBA has their own NBA development league. What we have is the first thing we're doing is we're building that minor league, should we say, or the feeder league. But so what that is we have live events that are mixed martial arts fights. And then the second thing we're doing is we're building the One More Gym brand or training facilities to take advantage of the everyone wants to be healthy post-COVID movement. And then our fighters are being trained there, but also they're all for the public. So actually you can go and join a gym and actually train right next to the fighter. So it's worked quite well. And then the third thing we're doing, we have our own production company where we produce all our own content, the live fights, and then we're just getting into producing other events, and we digitally distribute that ourselves and collect money on paper. So the three revenue streams are basically live event tickets for the events, 2 subscriptions for the gyms, and then 3 pay-per-view and selling our content that we own.
Okay. And I love the 3 things at a time rule. Like I'm going to follow that. I think that's very good advice for business. Can you give us an update on the live fighting business? How are you progressing with that?
Yeah, sure. It's actually been quite exciting. We've had some of our fighters go up to the UFC and have been fighting in the UFC. So this is all about the fighters to us. So to give the shareholders an update, we've been able to, our revenue streams is like we said before, is 1 is the live tickets. And then 2, we take a cut of food and beverage in the stadiums and places we operate. And then 3 is our pay-per-view business. So we've had a really good run. We kind of do it summer, fall, and then spring. But so the good news out of all that is we literally have 50 fights planned for the next 60 weeks. And so that business is operating very well. We're making money at each one of the shows, and our revenue is increasing. So it's kind of an exciting story. So if you look at, we're now at literally have 50 fights planned in the next 60 weeks. What's nice about that from our business is we're getting pretty good at predicting exactly what it is. So we know that in that business, we're going to do 1,000 fans, and that's 35,000. 1,000 fans times $35 average tickets, 35,000. We're going to do 5 to 10,000 in food and beverage, and then we're going to do 10 to 20 in pay-per-view. So if you kind of net that out to 50,000 times 50, you guys can do the math. We got a $2.5–3 million business there in the next round of 12 months, just in our fight group.
And people are so hungry for live events too. So I think that's, important space to be.
Well, yeah, we're also, Jay, that's you're hitting the nail right on the head, as I say. So back to my, hit the nail on the head and only do 3 things at once rule. So anyhow, what we're finding is obviously with COVID, which was a disaster, everything, the good news to the shareholders in the last 90 days, we've seen very little impact, from the virus in our live event business. We're having sellout crowds, and, so the people there's 2 things we're capitalized. 1 is the pent-up demand for everybody's been locked up. They all want to go do something. But the second thing that is more important is the mixed martial arts major leagues, the UFC, for example. They're spending a ton of money to educate and create MMA fans, but they're in the NFL cities. We're not in the NFL cities. We don't go to Atlanta. We're in Birmingham, Alabama, 90 miles away. So we're capitalizing on those fans, and they're showing up in droves.
Oh yeah, I'm sure. And speaking of pandemic impact, gyms hugely impact. My husband has a gym here in New York, so I know this firsthand. Where does that stand? How are you progressing with the gym part of the company?
Well, interestingly enough, where our gyms are growing, we're growing. So we now have 5 gyms, and our organic growth in our gyms is going about 20 to 30% a quarter in revenue. And what that comes from is 2 things: is the one thing that everybody in this world right now wants to be is healthy. Right. And so that we've been able to accomplish, getting a really high-end fitness facility. But what happens is we build those gyms out, and then we add the fighters. And then, like, for example, at the fights, we have a booth that says, come join One More Gym and be healthy. So that cross-marketing is working very, very well. But our gym business is growing 20 to 30% quarter to quarter.
No. And I remember when we talked last time, you were talking about the Q2 revenue, the top line revenue is growing. How does that look? Is that still constant? And how is the second quarter looking for you?
Yeah. So our second quarter, actually, we just finished it up, obviously. We did about 550,000 last in Q1, but we're happy to report in Q2, which we did a press release, will be somewhere around that 650 or 660,000 in revenue. So we're still growing, quite dramatically. And the other part of that is that's pure organic growth. There's no acquisition growth. That's just pure organic. So when you look at our two main revenue segments of the fighting business is, growing rapidly. And when I say growing rapidly, the COVID quarter, as I call it, we couldn't have any fights and we barely had one gym, was 60,000 a quarter. So you can see that dramatic growth. We've gone from, 14 months ago, 6 employees to now we're over 100 employees. So it's really growing fast.
Oh, so great to hear that you have recovered from the pandemic well. So now
let's not carried away. I didn't say I recovered. I just said the business is recovering. But
well, yeah, that's what I meant. So now you talked about organic growth. Is that how you expect to continue to growth, or do you look at some mergers and acquisitions as well?
Well, the answer to your question is I wanted to step back on the gyms. So to talk about organic growth. So the answer, though, is we're going to grow organically, and our target is 20 to 30% quarter to quarter. And then obviously we're going to really grow as we add acquisitions in the space. But the one thing to tell the shareholders, we have these 5 properties now, and we test marketed. We went in and we acquired the gyms, and then we went to our local people we know that ran the jiu-jitsu gym. And for those who don't know that, that's like where you like the old karate days. You go in. They have kids classes and, all that kind of stuff. So we've made a deal with a high-end jiu-jitsu group. And in our 5 facilities, the way we did it first is we went in and built the space out for the jiu-jitsu side. And then we went and got the people that we knew and put them in, and just to test to make sure that customers showed up. And boy, did they ever show up. Those jiu-jitsu gyms, we tripled their space and it tripled their revenue. So the good news for the shareholders is we have leased the 3 spaces next to our 3 gyms, and we're going in the jiu-jitsu training business with it. We've got a deal with a top partner that runs those kind of businesses for us. And so our gyms average, 20 to 30 to 40,000 when they're all repaired, meaning we fixed them, we've upgraded the equipment. And what this will do is double the revenue of every gym per month. So right now we've got the deal done, and we'll be announcing more about it, but we have leased the 3 spaces next to 3 of our gyms. And so basically our revenue model for our gyms is going to jump from 40,000 a month to 100,000 a month as we add jiu-jitsu and get the revenue. So, when you look at that, it's, that's how we're going to grow through organic. Right. And then when you talk about our acquisition strategy, and again, you know how the rules work, Jane, I can't tell anything. All I can say to the shareholders, we're in the process of 2 to 3 acquisitions that are in this space that are going to be very, very exciting. And when I say in process, I define that as, we're in the room, we got handshake, contracts are being done, but I can't really talk about it. Just to tell our shareholders, hold on, because here we go again. As the song goes.
Stay tuned, as they say.
That's right.
Okay, so how do you get the MMA customer go back and forth, the live events, the gym? How do you kind of incorporate that whole ecosystem?
Yeah, well, that's a very good word. What our business is, we talked about all the money that's been invested to grow and create MMA fans, which MMA now is the biggest sport in the world. And obviously that's a very, very exciting. And just to be clear, we are not the UFC. We're the little guy. They're the big guy. We're the feeder program, as I say. So they're our friend, not our enemy. We don't compete with them. We're completely different. We're just a little minor league. But again, we have 50 fights and all of that kind of stuff. But to answer your question, it's a very good question, is there's a lot of cross marketing going on. But what happens, let's say you're an MMA fan and you hear about one of our fights, you go to one of our fights and you say, oh, I'd like to get in better shape. So there we have the One More Gym table. And so we take the fight fan and we move them over to the gym, and then the same in the gym. So we say, hey, we sell tickets in the gym to people to go to the fights. So the cross marketing is working very well. And what happens, imagine if you're a fan of a fighter, and the group of people that follow these fighters, they follow the fighters like people follow a NASCAR driver. So this is not a team sport. I mean, they work out as a team, but it's like golf or it's like NASCAR. Yeah. So what happens is as the fighters go into the gyms, all of their fans follow. And if you can imagine, hey, I can go work out next to an MMA fighter. And so all of that cross marketing works very, very well. So for what that means to our shareholders is, if you think of it, we have a person and we know exactly how many people we have. And if you pay us $30 for the gym, and then if you attend an event a month, that's a $30 to $35 ticket. And then if you buy another pay-per-view, we got a customer that's going to spend $70, $90 in cash flow with us. And that's, as we do that, and as everybody knows, the value of our company is based on how much revenue and how many customers we have. But, that's the long-term goal we have a customer, and he's a gym customer and a fan for the fights. And as we tie all that together in the future, that's working very, very well. And that's what's creating the organic growth, quite frankly, in the gym business.
I could totally see that. I mean, you go to see an MMA fighter, obviously great physique and great shape, and you're inspired to do that as well. So I think that's really smart. So, okay, I know you can't talk a lot about the acquisitions, but can you give some kind of, when you might be able to make an announcement or any kind of hints for shareholders?
Well, as everyone knows in business, we think we have it done, but as we say, we haven't. It's not done until it's done. And as we say, I used to live in Texas, ain't done it yet. You know what I mean? But to answer your question, these are very exciting things that will. I feel highly confident in the next 90 days, you'll see some announcements about what we're going to do, and these are all businesses that add to that ecosystem. So our customer, like we were saying, he's in the gym, he's watching our pay-per-view, he's going to the live events. And just to give you an example, I'm training next to a fighter that's, training in our gym in Tuscaloosa, and then he goes up and he fights, in the north next. And so they put the pay-per-view on in the gym, right? And then, so he can sit at home and he can go over and then train with them. So, all of that ecosystem, that really the MMA ecosystem has been created. These businesses we're talking about is to get additional revenue out of that same customer and to add new customers. So obviously, if we have a new business with a customer and everybody wants to go see an MMA fight, in the UFC, obviously, is in the huge cities. We're in the little cities, right? And we're a $30 ticket at our general admission. So it's built to build all that. And so those acquisitions are all going to take advantage of everything we've spent all the time with for the last 5 years, just to think about adding revenue streams is what we're going to be doing.
So finally, Greg, just kind of explain why an investor would want to take a look at your company. Is it the high growth rate that you expect? I mean, what kind of things can an investor expect?
Well, I've been developing, I'm old as this, I've been developing companies for a long time. So the answer to your question is, as I say, if you want what I call in the old days a blue chip stock, it's Ford or General Motors and your small returns on something like that. We're the customer or the investor that's going to be interested in is a micro cap investor who wants a high growth rate, high return based, multiples. We're a development company. If you're watching our revenue, it just continues to climb. And so the investor that's going to be interested in us is one that, is more of a person who wants to put money on a higher risk. As they blend their portfolios, they have their low risk blue chip stock, and then they have a stock like ours that, we're trading at a lot of dollar volume of our stock. And, as we add these, we've had customers, that are doubling their money from some buys over the last 6 months and that kind of stuff. So the investor, to specifically answer your question, is the investor is interested in a micro cap, high growth stock over the next year to 18 months, that's the kind of guy we are. If you want to just put your money in Ford Motor Company and sit back, that's not us. We're very specific about that.
Okay. Thank you so much, Greg. Fascinating. And I look forward to bringing you back when you can talk publicly about the acquisitions.
Yeah, that'd be great, Jane. It's always nice to see you.
Thanks, you too.